Hi, my name is Edmund Olotu. I am the CEO of TechAdvance Limited, based in Lagos, Nigeria.
Welcome to the African Tech Roundup, Edmund.
Thank you for having me.
Absolutely. Now, we're talking off mic about how you haven't done too many interviews, and and I said, how are you going to get people to know about you and take on the likes of Interswitch unless you do these interviews?
Well, maybe that's why we're starting with you.
But that's awesome. Thank you.
So what we've done in the past, we've been very, very business to business and business to government focused.
In stealth mode?
I wouldn't say stealth. I mean, those who know us kind of like know us. So we're not hiding particularly, so I wouldn't say stealth. But we just realized that for what we're trying to, the next problem we're trying to solve, we have to be a little bit more out there. And so that's why, you find me here right now.
Okay. So for the benefit of people who aren't familiar with Interswitch, aren't familiar with the fintech scene in Nigeria, aren't familiar with your enterprise, for good reason, because you haven't given us interviews, give us a sense of what you exist to do and what's changed in your mission, or what sort of gear you've changed that would bring you onto a mic.
Okay. So we're a technology company, and we're focused, specifically in the collections, aggregation, reconciliation, and data analytics space. So we build technology to solve that problem set, and then we target specific industries where we know that problem set exists, right? So we're talking the electricity utility space, we're talking the transportation sector, government taxation, banking, even the banking sector, insurance, they have that problem. So that is how we started out as a company. And along the way, we realized that, if we're talking about financial inclusion, we're talking about the growth of fintech, one of us had to essentially take the bait to become, an infrastructure player of choice, wherein other fintech companies can connect to your infrastructure and rapidly scale. So that's kind of like the focus of the company right now.
So before you answer the second part of my question, which is, what gear you've changed, I'm curious now, based on what you're saying, to understand whether you started out as a bunch of sort of consultants consulting to, to government entities or government-owned entities or parastatals, as they're called in South Africa, or did you set out to be a startup in the space?
We set out to be a startup in the payment space, right? So we started out with the payment gateway for POS machines. And then, at that time when we started in 2009, the policy around payments, was very, very nascent. Somewhere along the line, that policy changed, and, you couldn't just be a POS gateway. You need to have licensing, you have a certain amount of funding and stuff like that. So we kind of morphed into a payment application development company, and we achieved some success doing that, especially for the utility companies, building out, reconciliation portals, building out billing systems, cashier applications, and stuff like that. Then we went into the transportation space and built, technology for the transportation space. And so we just kind of looked at the business and said, where else, in what direction do we really want to grow into? And we decided, maybe we should, be an infrastructure player so that other innovative fintech companies can come into these industries that we've kind of opened up as well with, more innovative products, better products, more nimble products for, financial inclusion, and just have a platform they can plug into, right, and grow rapidly, as opposed to trying to figure out the entire infrastructure from scratch. We can ultimately limit your growth. You literally just run out of cash runway if you had to do that as a startup company. So we're an enabler of fintech companies.
And so which fintech companies might you point to, perhaps some that I know or might have heard of, that have come to rely on the infrastructure you guys have built?
So Kudi.ai, for example, is a really nice innovative company, one that I use as a great example of a company that's doing the type of stuff that we like to see. The kind of company that would like to just plug into us and have access to infrastructure and the customer base. Paystack is another company. They power, electricity payment gateways. So that's another great company in the space. We're working with a couple of other companies in the lending space as well to enable them to do collections and disbursements of micro loans. There are a couple of companies that we've partnered with and they're working with us.
In terms of like how you monetize, presumably the fees that the likes of Paystack might charge their clients, you're costed into that, presumably?
So it's kind of like yes and no, right? We create a revenue line for Paystack in essence, right? So we're connected to the utility companies and everything, and then Paystack powers a gateway that would allow people to do online payments to the utility companies, for example. So we've created a revenue line from that obviously Paystack is happy to earn off, right? In other instances, a fintech company would connect to us and then pay us some form of a royalty for doing that as well.
And do you think the barrier to entry in establishing in-house infrastructure of the nature you've created is high enough to be an unfair advantage for the foreseeable future in your mind?
With technology, you never really know. But I think it is. I think that is the direction, even just from some of the companies that were listed here and everything. If you look at the profiles of what they're doing, they're extremely nimble. But to create the type of infrastructure needed to kind of like just plug in and go, it requires a bit of money. It requires a bit of funding. It requires even just a proof of concept. So you want to do a rapid proof of concept to show that customers would use the type of service you're trying to render. You really just want to do it as quickly as possible and not have to spend tons of US dollars doing a proof of concept. So I think especially if you're the player that helps to democratize fintech, you're an enabler, right? And being an enabler and being a platform player, it offers you some type of advantage in the market.
It begs the question, where did you guys get the money? And talk us through like the business development aspects of landing the likes of utilities companies and dealing with notoriously difficult government-controlled entities in order to execute on what you're doing.
Okay, we'll start with the funding. So the company is funded by my partners. They're we went to school together. They're based in Saudi Arabia and Bahrain. So they provided the seed funding for us to get the company up and running.
Are you allowed to say how much? I shouldn't say allowed. Tell us how much, please.
Maybe not.
Your friends in Bahrain wouldn't like that.
No, but yes. So that allowed us develop the technology, and then I can tell you for a fact that it was literally begging and in some instances brute force negotiation, just trying to get into the type of institutions we're talking about. We're talking about electricity companies that legacy, government run, slow to change and everything else. But luckily for us, we got into one of them. We were able to prove that the technology actually works and the technology is needed, and we got into others as well, and other people came into the space as well, and just kind of like just showed a direction in which the utility companies should move in, and which is just allowing payment companies help them with their collections. So initially, it was really, really difficult as being one of the first players in the space.
So who came first? Was it Interswitch or you guys?
No, Interswitch. So Interswitch was first because Interswitch did, most of the transaction information management systems for the utility companies for the postpaid billing. Then, after that, the likes of us, came into the space, eTransact, a couple of other companies.
And how competitive is it right now? I mean, in terms of that scene?
It's extremely competitive, but the electricity industry is a growth industry in Nigeria. I mean, it's kind of like plateaued a little bit just because the industry itself needs, a fresh injection of capital, fresh injection of new ideas. But, only in a country of 180 million people, only about 7.5 million people are paying electricity bills. So that it's still a growth industry. So it's a little competitive at the moment, but I'm fairly confident that over a period of time, maybe over the next 5 years or so, it's really, really going to open up and be, the players who are there right now would probably reap the benefits of all their hard work.
What do you guys consider key metrics within, you're sitting in your boardroom with your team, and what are you tracking on the regular to give you a sense of how well you're doing, I suppose competitively, but also as a business? Presumably you guys have had enough time to figure out a sustainable model, perhaps even a profitable one?
So revenue per employee is really important,
And how many employees do you have at the moment?
300. So that's really important for us because we don't want to be over bloated. There's a tendency to not know exactly what each employee does, and you just keep adding more, and you find out that your revenues are not growing at the speed at which your employee base is growing. Of course, top line revenues, it's very important to track. In addition to that, some of the other metrics we try to track is, our cost of development as well. So as an infrastructure player, you also don't want your cost of development to just kind of like balloon out of control. So you have to be very, very specific with what you're developing, really, really focus on the niche you're trying to target and not be swayed by trying to do what everybody else is doing, or, oh, it's nice to do this, so let us try and do that, So those are some of the things we track. And of course, you want to have a very healthy profit margin so you can keep motivating your employees and obviously, deliver returns to shareholders as well.
Yeah, and so how many years did it take you guys to break even?
It took us quite a while. I'd say we started out full, operations, say in 2010. And we broke even in 2014 going into 2015. So it was quite a...
Okay, cool. So back to a question that I forgot to bring back in after I deviated. I have a tendency to do that. The question of, okay, what gears are shifting? I think you alluded to it in one of the things you said, in that, the industry needs new ideas. It's probably due for fresh injection of significant money. Where would that money go, and what sort of new ideas? And presumably that's why you've seen fit to start publicizing some of the work you guys do.
I think most of that money has to go into the development of kind of like scalable, innovative products on the front end, on the customer side, right?
And the business can't sustain that growth on revenues.
Our business?
Yes, or generally speaking, yours, the industry?
Our business can sustain its growth as it is, but if we're talking about really trying to deliver fintech to the last mile, then...
So you want to go into startup mode in the Silicon Valley sense, in which case you need like a ton of fuel because you want to become a rocket now, you've been a plane maybe all along, that kind of thing?
You're kind of like pushing me to admit we're seeking financing, which...
No, we have not had discussions off mic about how these guys are looking for the next tranche of funding. I have no clue if that's the case. I am saying, though, I'm just trying to make sense of what you're saying and perhaps just help me clarify what you mean.
So what I'm trying to say is that if the industry continues the way it is, where every single fintech that comes in has to scale an infrastructure hurdle before it can, acquire customers and scale up, then it's going to cost a lot of money. It's going to cost a lot of money in general to get fintech to the last mile, right? But if you have a player who's already scaled most of that hurdle and can be a platform, a backbone for multiple fintech companies to come in, then what you find is that it takes less money to launch a fintech startup that will be solving a critical problem in Nigeria, right? So that is what I meant. And that's what I was trying to say.
All the rest of you are trash.
Yeah. So,
all the rest of you...
So,
I mean, fair enough. And really my questions are based on a modest understanding of what's involved here and really a surface knowledge of your particular business and how it works. And so what's your big play? I hear you sort of allude to this platform play, right? So I sense that's part of your roadmap, whatever it is, right? What's the big picture in the medium to long term for your business in terms of this platform play?
Essentially being the platform of choice. So constantly looking at our technology, looking where the opportunity lies.
Should we expect consolidation in this space, i.e., I don't know, a merger with, say, Interswitch?
Maybe not Interswitch. I think they're kind of like the the granddaddy of the industry.
They probably don't need anybody. Is that how it is?
I don't know. I wouldn't want to presume anything, but they probably don't need to merge with me. But yes, consolidation is important. There are a couple of companies that, if they alluded to wanting to merge or form, a larger consortium, I'd be open to that kind of conversation. Because I think that is where real value comes into play, right? So
how important is scale? I mean, in this context, in the short term, though.
For us,
yeah,
it's always important. So we've always been growth driven, right? So there was never a time, I don't think, where we thought to ourselves, maybe this is where we just sit back, relax, and just kind of like figure things out. No,
or let's own a sector.
Scale is always important to us, and we keep working, right, to achieve that scale. Scale comes in different forms in the industry we're in, especially when you're an infrastructure player, right? So, how great is your technology? How robust is technology? Are you plugged in everywhere? Are you ready to go? So there's scale in that direction, like rapidly growing the company to becoming that infrastructure player we're talking about. In addition to that is how quickly can you sign on, partner companies? How quickly can these companies come on board? That's also another avenue, for scale in our regard. So we're working hard in both, both directions. It's important for us to achieve both at the same time. Yeah, I don't think we're, relaxing. We're constantly scaling.
And does your strategy involve perhaps backing startups, downstream startups that would plug into your infrastructure? And if so, what would the perfect sort of acquisition or backed partner look like in that space?
A real live example of a company?
I don't know. A hypothetical, perhaps.
If a small company comes that has technology that makes it easier for people in rural areas to make bill payments, for example, reduces the cost for the utility company setting up, payment infrastructure deep in the rural areas where the average revenue per user is really low. I'd love to back a startup, of that sort,
with like equity in it.
Yeah, with equity or with infrastructure. Okay, you have this, you don't have any plug-in, it's going to cost you XYZ to kind of like scale the infrastructure hurdle. Come and plug in, and even if they can't pay upfront or initially, with the kind of infrastructure we built, we know that immediately they plug in, they'll have some kind of revenue base, and that could be a profit share, that could be that could be fees. So it just depends on what we see. So for us, it's also actively seeking out those opportunities as well, and not just waiting for it to happen. You have to kind of like go out there, because the thing is, partnerships and cooperation in the technology space is actually relatively new in Nigeria, right? So there's a saying, in Nigeria, it's every man for himself, which is what it was before. But if you look at the environment, you realize that is, probably not the best direction to go in. Cooperation, partnerships, and just building scale can only benefit everybody.
All right, man. Well, Edmund, thank you so much for your time. I've learned a ton.
Thank you very much. Thank you.